Okay, well this time let's try this Microsoft screen capture software and we'll see what works and what doesn't. We'll see if it works at all. Little new to the video recording game. Thought I would start putting some of my trading analysis on YouTube. So just not because I'm after an audience or I care about social media, but purely because I'm a lazy git. And I think this will be far more effective at functioning as a trading diary and a trading journal and a record than trying to take notes or types into a document or anything like that just makes me feel like my eyes are glazing over and I'm getting a headache. And I probably wouldn't have the discipline to keep up. Anyway, because you've got to be disciplined in trading. That's what they say. Disciplined trader. That's the title of the book, right, Mark Douglas? Well, different kinds of different discipline. For different folks, I suppose. So, in this very quick test video, I'm going to talk about my view on silver. I wonder if this Microsoft tool panel is being recorded here. Let's minimize it. Anyway, so here's the daily chart of silver. Slightly unique indicator suite, slightly different, slightly weird indicator suite, you might say. So why silver? Well, when you've only got a small account, which I do, being the humble trading peasant as I am, there's only so much point in trying to diversify your trading across assets. You may as well try and pile into something that looks good and you think has potential. You can diversify later. You can split your account 2 ways, 3 ways, 4 ways. When you've got more money, basically. I've only got an account with £500 in it at the moment. I keep having bills to pay, it's crazy. So that's what we're starting with. This time last year I had some good fortune during the big market crash. I was selling and I ran a couple £100 up to £3,000. I was very pleased with that. And then, because I kept thinking the market was going to keep going down, I sold into the rally all the way up until maybe November. Then I was fucked. So it's been, then it was Christmas, that's expensive, winter, that's expensive, and so on and so on. And here we are again, we're coming out of the spring. Technically I think it's the start of the summer here in the UK. And we've got a few £100 and we're going to give it another crack. So why silver? Well, on the positive side, commodities are entering what appears to be quite a significant upward phase, potentially a very long-term bull market. Doesn't mean it's all going to be smooth sailing. Silver, during the time that other commodities have been rallying, hasn't done too much. I mean, this was a fairly spectacular move here. Let's be honest. But then, since August, it's nearly a year ago, we're in May now, nearly mid-May. So that's nearly a year of consolidation in a $10 range from just over 30 to about 20. $8 range. It went down to 22, I think, in the September 2020. So what follows? Consolidation, expansion. And if we look at an extremely long-term chart, given the falling dollar, given the inflationary environment we're in, I mean, for goodness sake, if in March of 2011, April 2011, when there were certainly no issues with extreme inflation or anything like that, we could get to nearly $50 an ounce. And when we've had this huge, I mean, that by itself is a 10-year sell-off accumulation, and this was only just the first horrifying, almost vertical move up. And then, again, close on a year, that's 10%, again, of this 10 years of consolidation. We should be getting more upside, and we should certainly be going past $50 an ounce. What else makes me think that? Well, anyone who's been trading for a while learns to recognize these liquidity grabs, these spike down, spike up, that immediate bounce back that tells you, you know, look out above, look out below. We're coming here, we're coming here, we're coming up into here. This was the big distribution area that led to the breakdown, and then 7-8 year consolidation period, decline consolidation. We tested it once, we tested it twice. Yeah, we tested the $30 mark in August. We tested the $30 mark in February. Here we are in May, going to be June next. Looks like we're coming up to test it again. And, you know, the long run upside is going to be something possibly quite obscene. You know, why not? Why not? You know, why not $60 by 18 months' time? Why not? Why not a move to $60 in 18 months? Why not? So it's that potential, really. It's that potential. Big fan of my fib channels. I think fib channels are magic. I've not been able to trade Bitcoin. I'm with IG in the UK, ESMA regulated broker. I'd rather that than some wacky 500 times Caribbean outfits or whatever. Yeah. Anyway, speaking of wacky, let's look at these wacky indicators I've got. RSI of on-balance volume. What? On the monthly, positive reversal. RSI of ease of movement, positive reversal on the monthly. The ease of movement indicator itself, the histogram, hasn't done anything other than stay green. Very encouraging. Look at the weekly. On close, this segment trend line that intersects with the this big 50% fib here. That's a long-term fib, which is also kind of a pivot. This on close on the bodies on this pennant type thing here. Here and here and here, we've cut through it. So we've had a double big cut through here on key areas of resistance, on key pivot areas. Likewise on the weekly, here we go. Here is the positive reversal in more detail. Price at 22.65. OBV is here. Price at $25, or rather $25.45. Lower low. Higher low in price, lower low in the indicator. Same for the RSI of ease of movement, whether you go from here or whether you go from here. Double bottom, indicator is lower. Higher price, lower low. Double bottom at the lows. Disproportionate low compared to price. And then here, this little low here, there's a little bullish divergence here on the RSI of unbalanced volume. Now, why these wacky indicators? Well, I have a chart with more traditional indicators. There we go. We've got our RSI. We've got our composite index of RSI. Simple enough to make in Prorealtime. I think it was on the one of the Prorealtime websites, like Proreal Builder website, or the library of indicators. Someone had made a composite index, and it was fairly easy to create. There's a composite RSI index, derivative indicator of the RSI. I read Constance Brown's work, Technical Analysis for the Trading Professional. That's where I found that. So where I found that, it was basically the idea of derivative indicators that gave me the idea of, well, we've got unbalanced volume, why not RSI of unbalanced volume? Ease of movement, why not RSI of ease of movement? Anything that gives you a slightly different take, anything that gives you something new information-wise that might be actionable. You're looking for excuses to get in. That's what Simpleton says. You're just looking for an excuse to get in. And like the wide variety of information you can get from the chart, including these, I've never seen these indicators anywhere, you know. So it gives me more reasons to get in. which is what we want. We want reasons to get in. If you don't get in, then you're out. It's okay to be out, as long as you don't have a reason to get in, but you've got a reason to get in. You need to be getting in, is my view. So here on the daily, channel down, channel up, and you can see we're at the top of that channel, we're at this horizontal resistance here. That's the only fly in the ointment at the time being. That's the only fly in the ointment. Maybe we need to come down more. In any case, we got a positive reversal on RSI and on the composite index of RSI at this low, which preceded the move up, the back test, and the move up. Really, it'd be nice to see either no more than a back test of these broken fib support, this broken segment support that we saw on the high time frame that we looked at, and then a move up, or frankly just whoosh, up and away. We must be aware of the dismal possibilities that we might come all the fucking way, potentially as low as $19, potentially as low as $21.50, whatever. But it's looking promising. All these positive reversals been put in, especially when you can see them on the monthly and the weekly chart, those very long-term charts. You're seeing positive reversals. You've got to anticipate that there's going to be a decent up move. And maybe that's it. Maybe that's all we're getting. I mean, we've had a year of chop, why not more? But you take what you're given, you trade what you see. And you've got to try and take a position with a view to price going somewhere. If you were a very short-term trader, maybe you've even gone short here as a scalp or something. I don't know. But, you know, I think we're off to $50, $60 within 2 years. All being well. And that's my take on silver. Now, let's see if this Microsoft recording software has actually worked.